This was all fueled by broad-based buying, auto and metal stocks, leading the index to a third straight winning run. We talked about Titan, Apollo Hospitals powering the market with strong earnings, along with foreign fund buying looking sunnier. The rupee strengthened to about 90.12 on Tuesday for a bit before weakening towards the current number, which is at 90.54. And what we understand is that the Indian rupee is expected to find support because this is at the open, of course, because of that fall in US yields. That's what we're waiting to see, whether that will happen. 45 minutes will give you more on that. Inflows into Indian equity mutual funds. Surprisingly, they slipped for a second straight month in January as market jitters over geopolitical and trade risks weighed on sentiment. Industry data shows investments fell more than 14% from December to about 240 billion rupees. At the same time, foreign investors pulled nearly 4 billion out of Indian equities. The sell-off was reflected on the markets. The Nifty 50 did fall about 3%, with mid and small cap stocks also ending the month in the red. But since India and the US announced a trade agreement, reports say foreign investors are coming back to the Indian markets. And Reuters saying provisional data shows foreign investors bought around 1.7 billion US dollars in Indian stocks in the first 9 days of February. And last month, investors, they ditched equities for gold. Industry data showing Indian investors piled into gold ETFs, or exchange-traded funds, in January, driven by a surge in the precious metal, while domestic markets remained weaker. For the first time, gold ETF inflows at around 240 billion rupees matched or slightly surpassed net investments into equity mutual funds during the month. Gold ETF inflows more than doubled, while equity mutual fund inflows fell 14%. The shift also highlights a growing appetite for safe haven assets among domestic investors. At this point in time, gold prices, well, remaining positively stable at 5,050. Feroze Azeez is the joint CEO of Anand Rathi Wealth and is back with us. And it's great to have you back, Feroze. I remember talking to you about gold the last time we spoke and asking you this particular question, that is it simply that you'll see retail investors, take money out of the equity market and put it in gold, and that's perhaps what's happened. But I want to start with US-India, that particular tariff overhang. Has it gone completely in your mind, or is the market pricing it in only partially? You're not too excited about this, as I understand from your notes, because I want to check with you. Is it a win-win for both, or is it more of a win for the US, according to you? From your note, what we see is that you're pointing to how the US has achieved a little bit more than India, and you seem to feel that this is a win for the US. Is that correct?
No, that's not the summary. But yeah, of course, US has got its share, pound of flesh, I guess. Once the modalities are there is when you would exactly know what it is in ink. Point one. Point two, I think it's a win for both the countries. But from a GDP standpoint, you would have a 0.3, 0.4% impact. From a trade deficit standpoint, it is not so large in terms of India's trade deficit won't change dramatically. But I think it's very important strategically. From a capital market standpoint, of course, the macros will take time to show up. But from a capital market standpoint, any news which creates an overhang on the market for 6 months, like 1st of August, if you look at August, somewhere thereabouts is when the first 25% tariff and then subsequent 25 also happened in August. In September, we had some talks. In this Delhi, we had some talks in October. The only positive sign finally came on 21st of January when Trump spoke positively about a prime minister in Davos. And then finally, you have this in February. So the larger the overhang, larger the impact of a certain deal. So that's point two I'm making as a hypothesis. Point three, I would say that the low after budget and pre this announcement is one of the turning points in the Indian capital markets from a bearish sentiment which was languishing. Markets were languishing from 2024 for about a year and a half. I think that will be a turning point. Can the markets test a further low? Of course they can. Can they sustain there? I guess it's going to be very difficult to, because FIIs have sold a lot. And I think the shares have changed hands into DIIs over the last 1 year. And that's a very good sign. When shares find or ownership finds a permanent place, when the temporary person comes back, he has a per unit of money. He moves the market far more than what you would envisage.
Yeah, we're looking at your, very fascinating graphic on India's core demand status and US core demand status. And the status of India's core demands has fewer achieved statuses, while the US core demand status has many more achieved statuses. In some of India's core demand, you've written likely, partial, unclear, likely, ongoing. But with the US, you've written achieved, achieved, ongoing, achieved, achieved, unclear, achieved, partial. Just want to make that point. That's why I was extrapolating that you believe this is more of a win for the US.
Can I clarify? What happens is sometimes when you're negotiating, you have more points. You actually want to win the war, not those battles. But you need to fight a lot more battles than you. So it's not just about the number of counts. When you negotiate, you're asking for 10 things. You really want the one or two things, and it helps you negotiate. So I'm completely with you. I've personally in my note mentioned that numerically there are more wins for the US.
All right. Okay. Let's ask you this, because this is not something that's been addressed a lot. Does the market care about the fact that India hasn't confirmed Trump's claim that India has committed to stop buying Russian oil? And how much of a risk do you see the possibility of Trump reneging on this and reimposing the 25% tariff penalty?
I personally think I think that's time will tell. But whatever has come after this deal, you would see that if you look at the trades done from the 1st of or the 2nd of February, you'll be surprised that FIIs probably have bought about $1.5 billion. And mutual funds have sold marginally. Insurance companies have bought. If you look at the total trade done in the last 4, 5, 7 days, of course, the volumes in cash market, almost about 1 trillion rupees of shares change hands. Not that the whole rally of the last 7, 8, 10 days of 1,000 points and Nifty has happened on a back of a lot of volume. The average volume has been 1.25 trillion, and that's what the average volume is. So what am I trying to get to? If the trade deal is a little different, would it create a large impact? The answer is no. Of course, the Russian oil debate is going on in India a lot more, and only time will tell what would transpire. So I would refrain from commenting on that projection, which is anyone's guess.
All right. I want to point out that in the last couple of months, you've spoken to us twice before. And the first of those times, you said FIIs will come back to India when they were not. The second time we spoke, you said they have not come yet, but I continue to think they will come back. But since India and US announced their truce, FIIs have come back, have turned net buyers. You must feel vindicated. But I want to ask you, how sustainable do you think that is? And are there any risks to this?
Amitoj, I think, I don't consider this like a serious buying. Thank you. But I personally think that this kind of adjustments, almost on a 900 billion total ownership of FII, I would say that these are minute adjustments. Decisively, they should come back by April if this deal went through in the shape and form it currently is envisaged to be. What gives me a positive sign is not just the net flow, because if you break FIIs into a two-dimensional matrix, FIIs, which kind of FII and what are they buying? If you made this as a box and you would get about 9 different cells in that box, what gives me positivity is that passive guys buying small cap is very, very large. If you see the ownership change of FIIs in different segments over decisive periods of, let's assume, pre-COVID to now, they have reduced their ownership in large cap from 42.66 on a free float basis to 38%. Large cap has come down in terms of ownership, unlike the perceived FIIs run for large caps. In the small caps, they've increased their ownership by 2% at the same time where they've reduced the ownership by 5.6% in the large cap space. When a FII buys small cap, that means they are doing some degree of long-term buying. If they were completely disappointed with my market, they would reduce small cap more than the large cap. So this tells me that sentiment needs to go positive for large monies to come. Large monies get absorbed only by large cap. But their positivity towards India growth story is depicted in their action in the small cap, which is 22% of the 22.7 has gone to 23.61 and 11.4 has gone to 12% on a total float and a free float basis.
Amazing. This is exactly what I was going to ask you next. And I'm so glad you mentioned this because we've talked about this in the past and you've said that your first sentimental barometer is to understand the state of flows in the Indian market in the context of small cap funds. And that's what you've indicated right now because there does appear to be a significant shift in FII investment strategy moving away from these traditional blue chip large caps towards the growth oriented smaller companies. So thanks for that color. And in that context, I want to ask you is, India is, well, I think most would agree that one of the few growth markets left, and therefore one can assume that it will always be at a premium, and earnings growth will never catch up to valuations and will really remain liquidity driven. So in that context, how much of this happens, this catching up of this the earnings and the premium, but never completely perhaps?
Yes, I think valuation of India is going to be elevated for some time. Why does it deserve to be elevated for some time? One, like you rightly said, Amitosh, that growth is going to be larger and capital chases growth. The second hypothesis is India has not finished its financialization journey of the lower strata of one of the largest population in the world. Would you give in that period an extra premium or not? If a cryptocurrency which can't be valued can be pumped up so much by having levered ETFs, companies only owning as vehicles to own crypto, and they come into index, they take the equity capital to pump up crypto. If that is how an asset which can't be valued can get demand, then an asset which has growth, has close to more than a billion people. Of course, there are fewer who own. But if they are going to financialize their savings, and India is a savings country, right? You see almost 1,143 trillion rupees of savings in India, household savings. That needs to shift. That's got 6.7% in equity. Deposits are 52% of the financial assets of a certain country. During that period of 8, 10, 15 years, every country has got a bubble. And that's bubble. Here we are just speaking about 2 sigma more valuation than the historical.
Okay, let's talk about gold, even though there are many who will believe that crypto can be valued. Because SIPs versus mutual funds versus gold, that's an interesting narrative right now. Because in a first, gold ETFs drew more investments last month than equity mutual funds. And I know you think that silver is just too volatile, and yet this is happening. What's your perspective between SIPs, mutual funds, gold, and silver?
Yes, Amitosh, I want to take you back to the crypto discussion, of course, for the lack of time. They can be valued. Similarly, was Terra Luna and Terra USD valued as a stable coin, but that became zero in 2 nights, right? So anything which is on the theory that another person will buy it off me, and you can't own it and monetize it completely in whatever number of years. So Terra Luna and Terra USD became zero, and they were called stable coins, ironically, and they were valued at 1. Right. So coming back, that's a longer debate. But yeah, it's not just a off-the-cuff comment. I've done a reasonable amount of study to come to that conclusion that if you value it, then you need to be able to monetize it without a buyer. Coming back to the gold and silver, your judgment was absolutely right when the last time we spoke. You said that the retail will move to gold and silver. That happened in India, more from the HNI segment than the retail segment. I'm just giving you the little fine print. What has happened is the FOMO caught up so much in January. Unfortunately, in the last leg of a certain super speculative rally driven by a gamma squeeze, that's what is happening in CME. In my opinion, every day you're missing 2% on silver rally. The kind of money which moved is unprecedented in gold ETFs and silver ETFs. And the average purchase of the individual is, if you have to say it in dollar terms for your channel viewers to be understood, is $100 for silver and almost about $5,400 for gold has been the average purchase. And now you see about 30% lower on silver, 20% lower on silver, and about 10-15% lower on gold, 10% lower on gold. So yeah, that's sad that people definitely fall for the FOMO trap. But one silver lining in the dark cloud from the equity standpoint, Amitoj, which you highlighted, that has dipped second straight month, is the 31,000 crore systematic investment plan number. So what is the hypothesis I've been testing in India is the retail is behaving far more rationally than an HNI in India because the emotions are not driving decisions because of the smaller quantum, which an HNI finds it difficult to weather the volatility on larger values.
So much to talk about, so little time. Feroze Azeez from Anand, Rathi Wealth. The next time we speak, I'm going to ask you about the fact that you've said defense is overbought, but now India has gone ahead and increased its defense budget by 15%. But we don't have time for it right now. Next time. Thanks so much for that. Okay, coming up, India ramps up its critical